This video demonstration is on Social Security and Medicare, which is also known as FICA taxes. For this video demonstration, I will show you how to calculate Social Security taxes and Medicare taxes based on a semi-monthly period. So this one is for the employees of Lending Inc. They are paid on a semi-monthly basis. We're going to calculate the FICA taxes for the employees for the November 15th payroll. All employees have been employed for the entire calendar year, and the needed information is located below. So here we've got 6 employees: Smith, Plan, Char, Cisco, Rules, and Wilson. And they also gave us their semi-monthly pay amount. So twice a month, Smith gets $7,500 and so on. What we need to do here is calculate the year-to-date pay as of October 31st, and then from that year-to-date amount, we need to make sure that it is not over the Social Security cap of $118,500, which is the cap for year 2016. Let me just note that up here. There you go. And then for Medicare, no cap besides the additional Medicare tax enforced on individuals who make 200 grand or over, 250 if married. Okay, get the details of that in the book for Medicare, but that is the basics for Medicare additional tax. Additionally, I'm going to add in the percentages in here. This is at 6.2%. And the Medicare is at 1.45%, and the additional tax over 200,000 is 0.9%. In this example, we will not be utilizing the 0.9% as nobody will be over the $200,000 mark for any single employee. Okay, so let's go ahead and calculate year-to-date pay as of October 31st because we want to be able to arrive at the correct Social Security tax due to the cap here. We have to calculate as of October 31st how much each individual employee has made. So this is how we're going to do that. Because each employee is paid semi-monthly, and semi-monthly meaning twice a month. Okay, we're going to go ahead and dictate as of the end of October how many pay periods is that. So if it's twice a month, and we are now in the month of October, and it's 2 times a month, and October is the 10th month, we're going to take 10 times 2, which is 20, because there are 2 pay periods in 1 month. And now it's the 10th month. We figure it's 20 pay periods have passed. So I'm going to go ahead and note that here. So 10, 20 pay periods as of October 31st. So I'm going to go ahead and just do this simple calculation. I'm just going to take 7,500 times 20 months. That's going to give me a year-to-date earnings as of October 31st for Smith. For Plan, I'm going to do the same thing. I'm going to take $3,500 times 20 pay periods for a total year-to-date earned as of $70,000. I'm going to do that all the way down. I'm just going to, because I have a formula in here, okay, so you can see this formula here, I'm taking this cell and simply just multiplying it by 20 or 20 periods. because I have a formula in there, I can drag that formula down and it will calculate everything for me. Okay, so here is everything for us. Okay, now that we've got the correct year-to-date payments for or gross earned for each employee, we can go in and dictate how much Social Security tax should be imposed on each of these employees, taking into consideration the cap for Social Security. Okay. So if as of today Smith made $150,000, he will have a tax liability of 0 for Social Security because $150,000 is over the $118,500. He's well above the cap. It probably is true. It's probably true that he hasn't paid Social Security for the last few periods now. Okay. For plan, obviously, excuse me, I didn't mean to do that. Obviously, he's still under the cap, so the entire $3,500 is taxable under Social Security. So I'm going to go ahead and calculate that for him for a total of $217 for Social Security because he makes $3,500 semi-monthly. As of the October 31st, Char has only made $84,500. So if we add $84,500 to the $42.25, he has only so far made $88,725. So he is still well under the cap, and he will be entitled to pay Social Security at $261.95. That $137,900 is above the 118, so there's 0 liability there. Same thing for Rules, and then for Wilson, they're well under the 118, so we know that the 4,100 has to be taxed at the 6.2% for a total of $254.24. For Medicare, remember that Medicare does not have a cap besides the additional tax of 0.9% imposed on individuals making over $200,000. And as you can see, as of October 31st, even if we add today's payment or today's payroll to these amounts, we are not close to $200,000. So we don't need to impose any extra Medicare tax on the employees. What we will do is take their semi-monthly pay, multiply that by the 1.45% to get their Medicare tax, and we'll do that for all the individuals. And I'm just going to drag down my formula. So basically what I did was I took 7,500 times 1.45%. Or in decimal form, it's 0.0145. That's basically what I did. Okay. So that's how you calculate Social Security tax for these individuals and how you calculate Medicare tax for these employees.